Hey, good morning, everybody. Today is Wednesday, October 14th, 2015. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. Stocks fell on heavier trading volume, giving all the indices we follow distribution days. Distribution was far from convincing, however, as it came versus light Columbus Day holiday volume, and volume yesterday was below average across the board. Distribution is a sign of institutional selling, and too much distribution can indicate an uptrend is in trouble. But yesterday's light volume distribution didn't seem to indicate institutional sellers were in any panic to hit the exits. Of perhaps greater short-term significance is the fact that all of our indices closed near their lows for the day. The Nasdaq for now appears to have failed at its 50-day moving average, the same area it failed back on September 17th. The IBD 50 and the 8585 led the selling yesterday, both falling by greater percentages than any of the S&P indices. The IBD indices are updated constantly with the leading momentum stocks and give us a good idea of how the market leadership is performing. Yesterday's distribution notwithstanding, the market has shown very little sign of strain since the follow-through day that ushered in the confirmed uptrend a week ago. Nasdaq has two distribution days, the S&P 500 one. Market leadership appears to be getting a bit more focused with financials, apparel, building, and internet stocks setting the pace. Declining issues bettered advancers by better than 5-2 yesterday. Large capitalization stocks outperformed small yesterday and are outperforming on a 10-day moving average basis. Large caps outperforming is behavior less typical of a bull market. Our swing timing model is indicating a neutral condition in the market. In spite of the selling in the market yesterday, our market timing model on both the Nasdaq and the S&P 500 remain on our most aggressive rating, a margin signal, indicating that aggressive traders can begin to utilize margin to leverage their portfolios, while more conservative traders can begin to redeploy capital on the long side, keeping stops in place. The O'Neill timing model is indicating a confirmed uptrend in the market. All of our timing models are bullish, but this market remains volatile and prone to whipsaws. Be careful. As always, keep your stops in place and be sure to follow your written rule sets. Let's take a quick look at the Nasdaq Composite. The Nasdaq yesterday was down 42.03 points, or 0.87%. We closed at 47.96, and notice how we seem to have failed at the 50-day moving average. Also, the Nasdaq closed at its low for the day, which is less encouraging to the bulls. Trading volume yesterday was higher than the prior day. Keep in mind that this day right here was the Columbus Day holiday, and so volume was lower than it normally might have been. And so this distribution day compares to a fairly weak day. Notice how the distribution also was on below average daily trading volume. That's not the type of distribution that indicates that institutions were in any great hurry to exit the market. For you followers of William O'Neill, the market is in a confirmed uptrend. It has been since September 25th. We have two distribution days since the market confirmed the uptrend. Right now, the Nasdaq Composite is bracketed by support down here in the 45.06 area and resistance up here in the 4900 range. But the Nasdaq has also found significant resistance at its 50-day moving average. Notice how back here on September 17th we failed at that level. We appear to have failed again at the 50-day moving average. Our market timing model is on its most aggressive signal, which is a margin signal. What that means is that aggressive traders can utilize margin to leverage their portfolios. More conservative traders may want to work back toward fully invested, keeping in mind that the market's going to be volatile here and we should keep our top stops at their tightest levels. See what the S&P 500's up to. S&P yesterday was down 13.77 points, or 0.68%. It held the 2000 level, closing at 2003. Trading volume was a bit heavier than the prior day's week holiday volume. Yesterday was a distribution day by virtue of the fact that we traded heavier volume yesterday than the prior day. The S&P 500 is in a confirmed uptrend and has been since September 25th. The S&P right now is bracketed by weak support down here in the 1993 area and resistance up here in the 2044 range. The S&P is on a margin signal. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.